Corporate crypto treasuries. Bitcoin reserves could heighten credit risk, analysts warn. Bitcoin Treasury. Morningstar. Journalist. Tanzeel Akhtar. Journalist. Tanzeel Akhtar. About author. Tanzeel Akhtar is a seasoned journalist who has been reporting on cryptocurrency and blockchain technology since 2015. Her work has appeared in leading publications including The Wall Street Journal. Author profile. Share. Copied. Last updated 4 hours ago. The growing practice of companies holding Bitcoin and other cryptocurrencies in their treasuries may heighten credit risks, according to analysts at Morningstar DBRS. Over the past decade, cryptocurrencies such as Bitcoin and Ethereum have moved steadily into the mainstream, with both small and large companies adopting them for payments and investments. According to Morningstar DBRS analysts, many companies are now using cryptocurrencies for treasury functions, effectively positioning Bitcoin and other tokens as corporate reserve assets. These cryptocurrency treasury companies represent a growing niche within corporate finance, but one that carries heightened risks for credit profiles, concentration, and market exposure. Morningstar analysts note that corporate Bitcoin holdings remain concentrated among a handful of firms, with Strategy Incorporated alone holding over 629,000 Bitcoin, roughly 64% of all public company Bitcoin treasury holdings. Michael Saylor's strategy has been adding to its reserves at a rapid pace, snapping up Bitcoin almost weekly in recent months as part of an aggressive accumulation strategy. The top 20 public companies collectively control an estimated 94% of corporate Bitcoin reserves. This shows just how concentrated this exposure remains. In total, approximately 3.68 million Bitcoins, valued at around $428 billion as of August 2025, are held across corporations, ETFs, governments, and custodians. This represents nearly 18% of the current circulating supply, says Morningstar. While the growth in adoption shows confidence among corporates and investors, reliance on such a volatile asset for treasury management introduces substantial challenges. Morningstar analysts caution that concentration risk, coupled with the high market volatility of cryptocurrencies, could complicate liquidity planning and affect corporate balance sheets during periods of stress. Risks facing corporate treasuries. Morningstar DBRS analysts identify a range of risks for companies adopting a cryptocurrency treasury strategy. Regulatory uncertainty remains one of the most pressing challenges, with no uniform global framework governing cryptocurrencies. Although countries such as the US and those in the Eurozone have introduced clearer rules, these remain in flux, leaving corporates exposed to shifting compliance obligations. Liquidity also presents a concern. While digital asset markets have grown considerably, they can still thin out during times of volatility. In such moments, transactions may be delayed, and spreads can widen, undermining the reliability of cryptocurrency reserves as a financial backstop. Counterparty and security risks further complicate the environment, as many firms depend on centralized exchanges for both trading and custody. Recent disputes, such as the SEC's lawsuit against Coinbase, which was eventually dropped in 2025, show the evolving and unpredictable regulatory environment surrounding major platforms. Another factor is the materiality of digital asset holdings on corporate balance sheets. Treasury functions are designed to safeguard financial stability and ensure liquidity, but when Bitcoin becomes a company's primary reserve asset, its volatility can undermine these objectives. A June 2024 study found that Bitcoin was nearly 5 times more volatile than the S&P 500 in the short run, and 4 times more volatile in the long run, suggesting considerable exposure to price swings, according to Morningstar. Custodial considerations add further complexity, with firms needing to weigh the risks of self-custody against the vulnerabilities of third-party custodians. Implications for corporate credit profiles. The central purpose of corporate treasury management is to maintain stability, support consistent operations, and support growth. Analysts argue that the incorporation of highly volatile cryptocurrencies into treasury reserves fundamentally alters this role. The volatility of assets such as Bitcoin, combined with regulatory and custodial uncertainties, introduces new risks that can directly impact a company's creditworthiness. Morningstar DBRS analysts conclude that while cryptocurrency adoption by corporates will likely continue to grow, particularly as regulatory clarity improves and integration into payment systems expands. These strategies carry meaningful implications for credit risk. The long-term success of corporate crypto treasuries will depend on whether they can balance the promise of digital assets with the fundamental responsibility of safeguarding financial health. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Your phone can now mine crypto. XRP mining app turns smartphones into daily miners. Why is crypto down today? August 19, 2025 XRP price prediction. SEC ETF decision pushed to October 2025. Bullish or bearish? Price analysis. Ethereum price prediction. ETH tests $4,350 resistance. $10,000 this cycle? 21 hours ago. By Ahmed Balaha. Blockchain news. Thailand launches crypto-to-bot payment system for tourists starting August 18. For days ago. By Anas Hassan. Altcoin news. Altcoin season shock. These three coins could make portfolios pop if rotation holds. 2 days ago. By Hongji Feng. Best crypto to buy now in August 2025. Top crypto to invest in. 1 day ago. By Alan Draper. New cryptocurrencies to invest in August 2025. Top new crypto coins. 23 hours ago. By Inesis Tavares. 12 best crypto presales to invest in 2025. Presale crypto list. 1 day ago. By Alan Draper. 15 new and upcoming Coinbase listings in August 2025. 2 days ago. By Elijah Rankovich. 15 new and upcoming Binance listings in 2025. 2 days ago. By Elijah Rankovich. What is the next crypto to explode in 2025? 2 hours ago. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 8 hours ago. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. July 5, 2025. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? April 2, 2025. By Ben Beto.